the IRS, like, this is what I think a lot of people miss out on. Sorry to go over, you can cut me off whenever, Joe, but the IRS wants people to make money. Like, they really do, because when you make money, they believe that they're going to be able to tax that on the back end, you know?
Sure.
However, if we're doing things legally that we can do, even though we might be making more money to help save us more on taxes, it's not going to really matter. So, you know, the opportunities are endless.
Welcome to Show Me the Nuggets, where each week Joe chats with world-class entrepreneurs to find out the key principles, strategies, and processes that lie behind their outstanding achievements. Now, your host, the no-bullshit serial entrepreneur, Joe Troyer.
So I love the never leaves the financial sphere specification there, right? Because I feel like so many times, you know, when you talk to an accountant or any type of financial advisor, everything is like, yeah, you're spending $1, right, to save 30. And like, you're there trying to save money today. And really, like, you're losing 70 cents on every dollar you spend, right? And so I love that criteria. I love the Augusta rule we were talking about before the show started. I love that one. I think that makes total sense. I love the paying the kids one, and you gave a great example, like your kids are really young. Any thoughts, I guess, when the kids are a little older, right? I have 2 kids between 5 and 10, right? Like, what are realistic things that I could have them do or you've seen clients do in their business to actually pay a kid? I understand you can't pay a newborn or a 2-year-old, but I guess
Sure.
where have you seen that actually work, and kind of maybe at what ages or age ranges? I think some context there would be really helpful.
Yeah. As far as like when to start paying kids, like I mentioned before, they have to be given a task or a role based on what you're hiring them to do. And as long as they can complete that task or that role, then you should be able to pay them. Now, could you argue that a 4-year-old can do a task or a role? Depending on the child, maybe, you know. But the ages when I really start to see this become of benefit might be like 5 or 6. Unless, now I'll start to get into like what are some of the tasks you can do, unless there's a specific opportunity in your business where you could pay a younger child or social media or marketing or pictures or, you know, in some aspect like that, not necessarily a role that they have to complete, but a role that you're using them for in your business. And at that point, yeah, I would argue that there would be potential for that. As far as tasks, when they maybe get a little bit older, I've had clients attend meetings with them, you know, and that's something that, obviously my boys are younger, but when my boys are older, they'll be involved in meetings that we have with our attorneys. They'll be involved in meetings that we have with my partners. They'll be involved in meetings, you know, that we have, maybe me and my wife discussing money because she's a partner in my business. So, you know, they can attend business meetings. They can clean company vehicles. They can clean company offices. They can take out trash. They can, like I said before, market or be in social media posts or help advertise for you. They can shred papers. They can help mail mailers, you know, put papers in envelopes and help mail those mailers out. They can go to the store and buy, you know, the drinks that you have in your fridge behind you. Like different things like that is, again, there's a business task that needs to be done and they can help do that.
Yep. Makes perfect sense. Cool. So then the third tip that you gave was bonus depreciation. Can you give some examples of items for bonus depreciation, just for anybody that maybe isn't familiar with the regulations around bonus depreciation?
Yeah. Bonus depreciation is there's a wide variety of different things that you can use on an accelerated bonus depreciation schedule. To kind of break it down a little bit further, depreciation is the cost recovery of an asset. So I spend $50,000 on a car. The IRS is going to allow me to recover that cost over its useful life. And a useful life is just how long the IRS has deemed that asset is going to last, right? A vehicle is typically 5 years. But what the IRS has stated is that any tangible asset that has a useful life of less than 20 years can be accelerated in a bonus depreciation manner, which means I can just accelerate or capture more of that depreciation expense sooner rather than waiting the 5, 15, 7 years that asset might last, right? So as far as like what assets people should be looking out for, like I said, again, it's got to be tangible. So there has to be a physical asset that I purchase for my business. And typically any asset that you purchase that in value, any tangible asset you purchase in value of more than $2,500 should be put on a depreciation schedule. Okay. Yeah. But vehicles is a common one. Machinery or equipment might be another one. Now, this is kind of hard because I know a lot of the people that you work with or coach are in kind of that digital online space. So again, there might not be like a lot of tangible assets that you're using in your business, but again, what transition expenses do you have that you could potentially classify as a tangible asset? Again, your vehicles, maybe an office that you purchase or remodel, leasehold improvements to a current or existing office that you might own. Those are some of the things that we would talk about, or maybe the digital creator or the e-com.
Yep. Yeah, it makes perfect sense. Yeah, actually, I built this office here that I'm recording this in this last year. And I didn't think at all about, bonus depreciation or some type of advanced depreciation schedule. So thanks for that. That's helpful.
Yeah. There you go.
That pays for the podcast episode very well. That was much worth our time. Cool. Yeah, I think those ideas are really great. What about like I heard somebody the other day say that they run like a YouTube show or a podcast, video podcast, and it was a girl, and she said that basically like she was a news anchor. They'd be like putting makeup on her, doing her hair, doing her nails, and that would be part of the production and part of the show. So she's like, now I, as in my own company, I'm running this show. So now, like the day before I run a podcast or I do the show, I get all those things and I use that as a business expense. What do you think about that as a strategy?
Yeah, again, that's kind of like a transition expense that I've already talked about. In regards to her, she probably typically already wears makeup. She already probably puts that on a day-to-day basis. But her as a content creator making money off of the content that she creates would be able to justify and say that, hey, this is a particular expense. It's substantial in my business. It helps me make more money and can acute that. This is always a funny kind of ruling from the IRS that I go back to in these kind of instances. And it was actually highlighted the other day by another tax content creator on Instagram that I follow, just to kind of see what they're doing, and emulate some of the things that are successful on their end. But he's posted recently a lot about like content creators and OnlyFans creators and how they're independent contractors, they're business owners. And the post that he made the other day was along the lines of, if you get a boob job and you can directly correlate an increased amount of revenue to the size increase of your breast, you can write that off as a business deduction. Like this is probably one of the most outlandish examples that I can think of, but the IRS has actually ruled in tax court that if you can correlate that size increase to an increased amount of revenue, subscription followers, whatever, you can write it off. And that's an actual tax court ruling that has happened. I can't remember the actual ruling off the top of my head, but I know that happened several years ago. So again, the IRS, like this is what I think a lot of people miss out on. Sorry to go over, you can cut me off whenever, Joe, but the IRS wants people to make money. Like they really do, because when you make money, they believe that they're going to be able to tax that on the back end,
Sure.
However, if we're doing things legally that we can do, even though we might be making more money to help save us more on taxes, it's not going to really matter. So, the opportunities are endless, as I always say.
I love that. And I didn't catch it earlier until you just repeated it, but the classifying that as kind of a transition expense. I think you talked about the cars in that as well and things like that, but I didn't catch that language until you just said it again. And I think that's really interesting. And I think that's a great way to really think about, what are you doing every day? What are those transitions, and what are opportunities or areas that you could potentially, use to reduce, your overall expenses?
Yeah, no, for sure. That's exactly right. I'm glad you kind of caught on to that.
So, man, this has been fantastic. I know that you've already saved me a good amount of money on my next tax bill. I really appreciate it. And you really got my mind going, definitely, with the transition expenses. I think that anybody here, can use the bonus depreciation, the paying of the kids, the Augusta rule are 3 easy things to do. But there's a lot more basics, home office deductions, and there's a lot of things under transition expenses, your internet, your power, your home office, your cell phone, like all of those things. Those are very basic. There's a lot of things like that that you guys can do, but hopefully here are 3 out of the box ideas that you guys can use as well. Look, man, if somebody wants to reach out and chat with you guys, Brady, what's the best way to get in touch with you?
Yeah, the easiest way might be just to go to Instagram, follow me, the Brady Slack. I've got my link. I've got my website attachment there, and you can go online and you can listen to my podcast. You can schedule a consultation. You can look at some different articles, or you can sign up for my email list that I put out every Tuesday, that Tax Tuesday email list. That's a good way. Otherwise, like I said, you can always reach out to our office, or you can send us an email. My email is brady@highcountryfinance.com.
Awesome. Yeah, definitely give Brady a follow. Great content on the socials. Definitely some good stuff and stuff you guys can implement in your business right away. So I guess in ending this out and rounding it out, Brady, one last question. So I feel like every podcast they say, like, what are your favorite 3 books? And I do something a little different. I think it's all in how you ask the question. Recently, since starting this podcast, I gave myself permission to pick up a book and actually not finish it, because there were so many times that I'd pick up a book and I'd struggle with it and I'd feel guilty, like I had to read the whole damn thing. And I've really stopped that, right? And said, it's okay. If I don't like it, I don't like it. There's plenty of good book recommendations out there. So when I have cool, smart people that I like on the podcast, I always ask them, I think a key question, and that's like, what's the one book for you that you think has made the biggest difference, the biggest impact on the way that you do business, the way that you see business, the way that you interact with people, whatever that is, what comes to mind?
You sent me this question. I've been thinking about it, but I think I'm going to stick with the theme of our conversation today with taxes. And if I were to talk about one book that kind of changed my mentality around taxes, it's written by, I would consider him a friend and a mentor. His name's Tom Wheelwright. He's a rich dad advisor. He advises Robert Kiyosaki. We're in accounting networks together. I've spoken on stage with him before. But his book, Tax Free Wealth, I think it, and then his new book, a win-win wealth strategy, the 7 strategies that the government wants you to, or the 7 investments the government wants you to make. That's his most recent bestseller. Those 2 books, hand in hand, I think, for any entrepreneur who would like to understand more about taxes, are 2 that are must read. They highlight very simply what the government wants to try and achieve by issuing taxes and tax law, and what the purpose of tax law is. And it helped me understand my role as an advisor in helping business owners be able to continue, as Tom says, make more money and pay less in taxes. So those are 2 books that I broke your rule. I said 2, but they're by the same guy. But anyways, yeah, Tom's a good friend, a mentor of mine. And those are the 2 books I would recommend.
That's awesome. I've read the first one, but I didn't know he had a second one out. So thank you for that. That gives me a great book to read that I know I'll enjoy. And so this podcast again, worked out. That's a great recommendation. Definitely recommend his first book, and the second book I'm sure is great, just like the first. I think that the book does a really good job setting up like why it's your duty to really go after this stuff, and that like at the end of the day, like paying as little on taxes that's legal is not a bad thing. Like, this is being set up for a reason, right? Like, these laws and regulations get passed because the government has benefits in you taking advantage of them, right? They're trying to push policies, they're trying to make something better. And so they're going to reward you for taking part in the strategy. And so I think that book, for me, helped fundamentally change kind of my thoughts on taxes as well. And I think, that would be a great win for anybody listening.
No, I'm glad I could, again, great book recommendation.
Awesome, man. Well, thank you so much for spending the time with us, Brady. It's been fantastic. I hope you guys enjoyed this episode. We'll see you in the next one.
Thanks for tuning in and Show Me the Nuggets. If you've been enjoying the podcast and find our content helpful, please visit our Apple Podcast page, hit the subscribe button, and leave us a review. Joe and the whole team have been working hard to bring more value to the show. Your feedback will go a long way in helping us make the show better and reach a wider audience.